Hi guys, this is Siyabonga from Millionaire's Journey. We are continuing with our trading course, and thank you very much for being part of this course. On our last topics, we talked about what is a trend line. We talked about the market phases, where I explained the trend line, downtrend, and consolidation, arranging market. We then talked about how to identify trend lines, where I said you need a minimum of 2 lows to draw a trend line. You need a minimum of 2 lows. Let me just do it like this. You need a minimum of 2 lows to draw a trend line. So this can be your trend line. So I also explained a bit about trend line strategy. I also explained a bit on whether are trend lines reliable or not. So today we are continuing. We'll be talking about analysis. We will be talking about analysis. I will be explaining what are analysis. I'll also explain the types of analysis, because we have 3 types of analysis. We have technical, we have fundamentals, and we also have sentiment analysis. And then we'll talk a bit about which analysis is the best, which analysis is likely to assist you, or which analysis will you find it best. So let's continue with this course. And then, so on the screen I will be explaining what is analysis. Let's just explain the simple concept of analysis. What is analysis? Analysis is a detailed examination of element or currencies or structure of something. So it's a detailed examination. It's like you are checking, you are trying to understand all the details about that particular structure or element or currency pair or stock that you are looking at. So what are the 3 types of analysis that we have? I just explained now on the previous screen. That we have technical, we have fundamentals, we have sentiment analysis. So let's go on to explain this analysis one by one. So we will start with technical analysis. So technical analysis is a study of price movement without regard of the reason behind it. So technical analysis is a study of price movement without a regard of the reason behind it. So people who use technical analysis, they study the price movement. They don't study why the price moved that way. They study the price movement. So technical analysts, by analysts I mean people who use technical analysis. Technical analysts expect that recent price movement will continue and offer you a profit opportunity. So technical analysts, people who use technical analysis, they expect that the previous or the recent price movement will continue and offer you a profit or a trading opportunities. Let's check a little facts on technical analysis. You see it says facts about technical analysis. Technical analysts believe that prices are not random and that they move much of the time repetitive patterns that can be identified and exploited for trading gains. So people who use technical analysis believe that the price doesn't just drop or it doesn't just go up. It moves because of certain patterns, certain behavior. it says here, technical analysts believe that prices are not random and that they move much of the time repetitive patterns and can be identified. So the price moves in patterns that you can identify, in patterns that are easy to recognize, and you can exploit them for trading gains. You can make profit out of these trading patterns. So why are we talking about patterns? What causes these patterns? So the reason for patterns to appear and reappear is human behavior among universe of traders. So technical analysts believe that the price doesn't just move random. There are repetitive patterns that can assist us, not particularly tell us that the price will drop or the price will go up, but they can assist us. And the reason for these patterns to appear and reappear is human behavior. It basically, we are the one who are creating those patterns, because we are the one who are moving the market. When the market buys, it means a lot of people are buying it and the market is just going up. So we are moving the market. We are the one who are creating these patterns, and we know if we see this certain pattern, the market is likely to react this or in this particular way. Technical analysts believe that everything important in the economic and financial environment, including data and news about the currency itself, is already reflected on the chart. So people who trade technical analysis, they believe that the everything that you need to know about the currency pair is already reflected on the chart, and this is the chart. So technical analysts believe that everything that you need to know about a particular pair is reflected on what you see on the screen right now. So they believe that everything that you need to know is already reflected on that screen. Advanced technical analysts try to blend or merge both technical and fundamental analysis in order to refine their forecast. So people who master technical analysis can sometimes try, or they usually combine technical analysis and fundamental analysis to make their forecast even better, to make their win probabilities high. You know, since I always say that in the market there is nothing guaranteed, there are no 100%. So even advanced traders, they try to blend or merge. So they are trying everything that can make them win. They are trying to combine methods, you know. So they are increasing their win rate by combining technical analysis, the patterns, the pairs, and then they are combining with the fundamental analysis, the data, the data, the news, and the economy and financial environment of that currency pair, and they combine it with technical analysis to try and see where the market might go. And as they always say, 2 is better than 1. So someone who uses fundamental and technical analysis, sometimes they can be better than someone who uses technical analysis only, or uses fundamental analysis only. So it's better to use both if you can. All technical analysis techniques are based on past price movement. So people who trade technical analysis, each and every trade decision is based on a past price movement. Some people can trade using the trend line. Let's say when the trend line give you the second point, you draw your trend line and wait for the trend line to be touched the third time, and you can sell that pair, and it works. I also use that strategy. We are using the past information to predict the future. The forecast aspect is a skill that the analysis bring to the exercise. So this is the skill that you need to know. You need to practice this. It doesn't happen overnight. It takes time. You need to practice. Everything works. Each technique has its own virtues and drawbacks. So each and every technique has its own bad side and its own good side. Everything works after all. Technical analysis is the framework in which traders study price movement. The theory that a person can look at the historical price movement and determine the current trading condition and potential price movement. Technical analysis breakdown. So basically, you are looking at the past, trying to predict the future. You are looking what happened in the past, and you are trying to predict what might happen. So you are looking at this chart and you are trying to predict what might happen, and sometimes it works out. Let's say you drew a line and you say when it breaks you are selling, and yes, you can use this past or this previous move to trade this pair. You can use the past to try and predict the future in the market. It's absolutely normal. We do it all the time. If a certain price held as a major support or resistance level in the past, forex traders will keep an eye out for it, and based on their trades around their historical price level, technical will look for similar patterns that have formed in the past and will form trade ideas, believing that price could possibly act the same way that it did before. So let's say maybe the price was dropping and it came here and created a low and started going up. Technical people who trade technical analysis can come and put a resistance like this and set the rule that maybe if the price comes back here, they can start looking for buying opportunities, or when the price breaks this level, they can wait for a pullback and start looking for selling opportunities. That's how you can use technical analysis to trade. You are using the past movement to try and predict whether the market will go up or go down. So technical analysis works like that. So if a level was resistant, it has been a resistance for some time, people who trade technical analysis, they can come and look at that level as a potential trading level. Technical analysis is not so much about prediction, it's about probabilities. So don't try to be 100% all the time. Just ask yourself what can happen, what cannot happen, because anything is possible, and try to trade and be free and trade, because trying to avoid losing or trying to predict the market and acting like you know where it might go will cost you, and you will lose a lot of money. Technical analysis is the study of history, price action, in order to identify patterns and determine possibilities of the future of the direction of the price. So that's all that I have on technical analysis. This is the explanation, and I broke it down into many pieces so that you can understand it better. So let's move to fundamental analysis and see what is going on over them. Fundamental analysis. So what is fundamental analysis? What is fundamental analysis? Fundamental analysis, technical analysis involves looking over a chart to identify patterns or trends. Fundamental analysis involves looking over economy data reports and news headlines. So while While technical analysts are looking at support and resistance, they're looking at trend lines. Fundamental analysts, or people who trade according to fundamentals, are watching the news. They're looking at the history of the currency pair. Was it strong? Was it low? So they are trading based on the news and the history of a currency pair. Fundamental analysis is a way of looking at the forex market by analyzing economy, social and political forces that may affect the currency pair. So you are basically looking at the history of that currency pair. You are looking at the history, you are looking at the country, you are looking at the social, the economic and the political data, so that you can check if is it weak, is it strong, will it push the price up, will it push the price below. While people who trade technical analysis are waiting for a pattern, you can while if you are trading fundamentals, you are just waiting for news, you are listening at the news. You have to look at the different factors to determine which economy is stronger and which one is bad. So you need to look at different factors. You need to look at factors like political and social, economic, things like that. You need to look at them and try to determine which currency pair is strong and which is likely to go up, and which currency pair is bad and likely to go down. You have to understand the reason why and how certain events like increase in the unemployment rate affect the country's economy, monetary policy, which affect the level of demand for the currency. So you need to understand if they are releasing news about unemployment, you need to understand how they may affect the economy. Will they push the economy up or will they bring the economy down? And you can trade based on that. The idea behind this type of analysis is that if a country currency or future economy look good, the currency should strengthen and it can start going up. The better the shape of a country's economy is, the more foreign businesses and investors will invest in that country. If the country is good, the currency gain value, and if the country is bad, the currency loses value. So when you are trading fundamental analysis, you are looking at the country, you are not looking at the chart, you are looking at the country, and you are trading based on the news, the social, the political, the economical. You are looking at all those things, the economic data report, and you're looking at news headlines. You are looking at all those things that are happening into that currency pair, and you are trying to determine, will it be strong, will it go up, or will it be weak, will it go down. That's what you are doing when you are trading fundamental analysis. So let's go on and look at sentiment analysis. The sentiment analysis. Let's look at the sentiment analysis. What is sentiment analysis? What is sentiment analysis? Sentiment analysis is used to judge how other traders feel about a particular currency pair. Right? So you are looking at the chart and you are trying to understand how other traders are feeling about that currency pair. Is that currency pair volatile? Is it moving? Is it consolidating? Is it on an uptrend? Are traders buying? Is it on a downtrend? Are traders selling? Is it moving in range? Are traders waiting for the breakout? So sentiment analysis involves you trying to figure out how do other traders feel about a certain currency pair. Sentiment analysis is important. It's very important to understand what or how other traders feel about a particular currency pair, because you might be selling while other traders are just buying it, and you are selling it alone. Each trader has his or her own opinion of why the market is acting the way it does, and whether whether to trade in the same direction of the market or against it. Each and every trader sees the market different, and they have a different view, they have a different point of view. I can see something, I can see a sell, you can see a buy, and we can both have reasons why we are saying it might buy, why we are saying it might sell. So each trader's thought and opinion, which are expressed through the position they take, helps form an overall sentiment of the market regardless of what information is out there. So the news might saying what it will sell, but if most traders are just buying that currency pair, it can just keep on pushing up, because whenever you place a trade, you are putting some value on a currency pair and you are moving that currency pair. So each and every thought, your opinion, if you are saying it's gonna buy, we see through the chat how you are behaving and what you are thinking. Forex sentiment analysis is the process of identifying position of traders, whether net long or net short, to influence your own trading style. So before you place a trade, you are looking at the overall of the the market movement. Is it going up? Is it going down? Net long and net short. So here is how you can read the sentiment. We have 3 ways. There's possibly more out there, I don't know. There's 3 ways to read the forex market sentiment. Firstly, you can read it through the trend. Is it going up? If it's going up, it means the traders are buying. Is it going down? If it's going down, the traders are selling. Is it moving in range? If it's moving in range, traders are waiting for the breakout. So you can just use that to analyze the market using the sentiment analysis. Daily traders can use trend on bigger time frames to define the market sentiment. So daily traders can just use the higher time frame like 4 hour or daily or even weekly to determine if the market is going up or going down or moving in the range. Compare the direction for the trend using both small time frame and large time frame. Yes, you need to compare the small time frame trend and the large time frame trend, because one candlestick, one selling candlestick on a daily chart can be a full and a complete downtrend on a 15-minute candlestick. Let me say this again. One falling candlestick on a daily chart can be a full complete downtrend on a 15-minute or 30-minute chart. So you need to compare the trade. Do they match? Compare the trend line on a smaller time frame with the larger time frame. Trade only when the two are in agreement. Only trade when both trends are going the same direction. Don't trade if the bigger time frame is saying buy and the smaller time frame is saying sell. Don't trade, because you need to try to move with the market and make sure that the trend is the same. The trend is in one direction. Another way to read the sentiment is by price action. You can also use price action to compare traders' response toward a certain currency pair in both directions. So you can use price action. By price action, I mean how the price is moving. Is the price creating lower lows? Is the price creating lower highs? Is the price pushing up or is the price pushing down? Things like that. Is it pushing up? Is it pushing down? That's price action. How is the price moving? Is it creating low or big highs or creating big lows? That's price action. We are looking at how the price is moving to try and determine where you can go with the market. If the market moves up very fast and slow while falling, it shows that the base currency is stronger than the code currency. You remember when we started, I said there's a base currency and there's code currency. For example, if we are trading a euro USD, a euro will be base and USD will be code. So if the market moves up very fast and slow when falling, it shows that the base is stronger than the code. So if the market pushes up and then falls a bit and pushes up, it means that the euro is stronger than the dollar. That's what it means. And then we also we have momentum. As price moves up and down on the market chart, the buyers and sellers are expressing their feelings and perceptions about the currency, about the current status of the currency pair. So as the price is going up and down, the traders, this is the traders expressing how they feel, or what they think, and what they're expecting to happen on that currency pair. Momentum measures price with time. A currency pair starts making lower highs, and in an uptrend, it shows that the bulls are losing momentum. When the price make equal swing up and down, it shows that the strength between the bulls and the bears is equal. So if the price goes up, goes down, goes up, goes down, goes up, it means the sellers and the buyers are both equals. But if the price goes up and then comes down and then goes up and comes down, this means the sellers are stronger than the buyers. It means that the sellers are stronger than the buyers. So let's talk. Let me show you these patterns that I was talking about when I was saying technical analysis, or technical analysis use pattern and they wait for those patterns to form and they start trading based on those patterns. We have a full series of videos where we explain this, but on this one I'm just showing you the examples. For example, people who are trading support and resistance, they are using the previous past or the previous data to see whether the price will sell here or it will buy here. They are not guessing. Even those who are using the downtrend, they can try to see whether the price will sell on the third touch or what. So when I say patterns are formed by human behavior, I mean things like this. We have double tops, we have head and shoulders, we have rising wedge, we have a double bottom, we have inverted head and shoulder, we have falling wedge. There are much more patterns, and we will have a video where I will be explaining them and how I see them and how you can see them. So these are what a technical analysis use. They use these patterns, they use support and resistance, they also use trend lines, to try and get where the market is going or where the market might go. So talking about which analysis is the best. Now this one is tricky because we are not the same, and we prefer things differently. Fundamental analysis doesn't matter according to me. It's already showed in the chart. Fundamentals don't matter according to me because they are already showed on the chart. By reading this chart and trading price action, I believe that I can be profitable, and I don't need to be searching about economies and reading all those news and watching those news. Technical analysis is just the use of lines and drawings. as I said here, we are using channels and we are using trend lines, we are using support and resistance, we are just using lines and drawings. The different types of market analysis complement each other. So basically you can need one or you can just need all of them because they complement each other. Technical analysis is a study of a currency pair movement on the chart. Fundamental analysis take a look at how the country economy is doing. Market sentiment determines whether the market is bullish or bearish, current or future outlook. So you can use all of them. For me, I'm using technical analysis, but you can research and learn how to use all of this together and how to combine them, to being one particular strategy that you can be profitable, and that if you can use them, because it takes time to learn all of this. I feel it's better to focus on one thing and master it than try to add other things on it. So I hope you learned all these things and now you know what is analysis, what is technical, fundamental, or sentiment, and you understand which one you can use. After watching this video, you must know which one you prefer. Do you prefer reading the news, reading the headlines, watching the news, or do you prefer drawing the trend lines and watching the chart? It is all up to you and what you prefer. So thank you very much for watching up to this very end, and we shall meet again on the other video. Please participate on our Google Classroom and check the previous videos, as they will help you as we are building this. We have a foundation we are building from the start and we are going to the top. It is not good for you to just jump in while we are at the top and you didn't see our videos while we were on the foundation. So thank you very much.